That's a lot of accounts. That's a lot. There's a lot going on here. However, don't fret. Do not worry. Lots of good things here. What does this look like to you? Just think about what this looks like. Well, this looks like balance sheet and income statement. These are the more specifics of the balance sheet and the income statement. We've got cash and cash equivalents. And you know what? I want you to try to think for each of these. What would be a good sim for each of these sections? Because you'll have a good possibility of seeing a sim for each of these. For example, cash and cash equivalents. What are types of questions you'll see with those? Well, you're going to see book to bank to book, bank reconciliations, right? You might have seen those in the real world if you've worked in that space. If you haven't, no worries, right? The bank has a balance of how much cash you have. Your books have a balance of how much cash you have. You need to reconcile them and understand the differences and why there would be a difference between them. Trade receivables. This is accounts receivable if you didn't take a guess yet, but trade receivables, it's just the receivables based on trade, based on your business that you do. That's why it's called trade receivables, but that's just accounts receivable. What's that going on there? Why is that important? Well, we're going to see our accounts receivable aging schedule. That's a possible sim for this section. And well, we need to actually collect on that, right? We have allowance for doubtful accounts. That's going to be, bad debt expense, allowance for doubtfuls, different accounts we'll see there. Not too bad. Inventory, LIFO, FIFO, weighted average, perpetual periodic, cost of goods sold, ending inventory. If you can answer all those, you'll be fine. If you don't know what that means, you'll see it in our section there. PP&E, depreciation all the way, straight line, double declining. We got it all. We are ready to prepare you for it all. Don't worry about that. You'll do just fine. But like I was saying, lots of these make well for good sims. They just do. There's lots of real world schedules that you're going to have to do in your financial career. PP&E, depreciation schedule. Super common report you'll have to do in the real world. Intangibles. You depreciate fixed assets. What do you do to intangibles? You amortize them on the straight line basis. What is that? Goodwill, patents. We've got a lot of copyrights. We've got software, intangibles, non-physical assets. Those are assets in your balance sheet. Think where each of these belong. Is it an asset, liability, equity, revenue, expense? Where does it belong on our financials? Payables and accrued liabilities. Those are liabilities on our balance sheet. There's a lot going on there. We'll see that. We'll get into that a little bit further. Equity. Equity belongs in your balance sheet. We've got a lot of interesting topics. APIC, par value. If those two phrases, statements, whatever you want to call them, give you a little anxiety, I didn't really understand them in college. No one explained them to me properly. It was a miracle I ever understood them properly myself after teaching them to myself and getting the proper help during the CPA exam. And I'm going to make a point of that. Don't you worry. I'll make a point of that in the lecture to tell you that I'm going to really explain it to you in a way that you likely have never heard it before, and it's going to make sense. My goal is that you're going to actually understand this, and I'm going to do a better job than maybe some of your college professors did. Revenue recognition. Get this phrase in your mind. Revenue is recognized when earned. I'm going to say that all the time. And with that, every rule with recognizing revenue, whether it's construction or sales or services, it is based around that revenue is recognized when earned. It may not seem that way, but that's the core principle behind all of that is when have you essentially earned it in each transaction? We'll dive into the more specifics in that section. Lastly, income taxes. Not the most fun section. Some of these other ones are a little more enjoyable. However, income taxes, if you've taken reg, or if you're just familiar with taxes, you've got temporary and permanent differences. For example, municipal bonds, fines, penalties, those are permanent differences because you can't recognize them on either the financial statements or the tax return, in this case, the tax return. Temporary differences are going to result in deferred tax assets and deferred tax liabilities. And why do we care about this? Well, you're thinking, shouldn't that just be on reg? Those two accounts, the assets and liabilities, are on the balance sheet, are on the financial statements. It's kind of, you could think of that like cash to accrual. Why are we dealing with cash here? Well, it's kind of relevant, and the reconciliation between the two is important. We'll dive into that a lot more in a bit as well. I don't want to keep you waiting too long. We've got a lot of great accounts here. Lots of great demystifying sections. Take your time. Watch these videos. I know I could talk fast sometimes. It's okay. Rewatch the videos. There's a lot of action-packed content here. You're going to enjoy it. I know I had a great time making it, and I hope you find it valuable. Thank you, and let's dive into all these financial statement accounts.